The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 15th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we're going to cough, but it really means we can find the good in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problema. You can let your fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject line heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 209 points. That's about 0.9% to the upside, 24,968. S&P's up 4 points, only less than 0.2% to the upside. NASDAQ up 7 points. That's nearly only 0.11% to the upside. Russell 2000 down 0.4%. As semis are flat, up a buck. New York Stock Exchange flat, up a couple bucks. NASDAQ Composite up a buck flat out there. Wilshire 5,000 off 8. The trainings are up 42 points out here. So we've got, and the spot volatility index, excuse me, trading back below its 50-day exponential moving average at 1651 as we speak right now. Gold off nearly $9, silver down 13. So much to take a look at. But let's start with what the first request is. That first request is, let me find it here. It says, Steve, question for you about the NASDAQ 100, the NDX. And the NDX, well, let's just do this here. Let's put the chart up. It's going to be a little bit easier because I had already gone ahead and put this up here. So the question is, so take a look at the Fibonacci expansion. And this is a quarterly chart that I just happen to have up on the screen here. Put it as monthly, but quarterly is going to be easier for you to see. And when prices are, so we can use the Fibonacci summation series to help us identify price target areas. We don't necessarily have to use it as an exact number. We just use these as areas. And so if we take a look at the highs from back in 2000 inside the NDX 100, all the way down to the low in 2002, if we do a Fibonacci expansion of that, and there's several. There's the 1.272. That level was 59.10. There is the 1.618 area. I've got that priced out at 73.01. And the question was, hey, we got up to 71.86. That's pretty close to the 73.01. So 7,200 versus 7,300, at least as my calculations go on the Fibonacci expansion series out here. Is that a candidate for a top out there? And it could be, but we have to do more work than that. And if this level doesn't hold, then price will go up to the next level, which could be the 2.0 area. Let's go ahead and figure out what that is. I can add that in here relatively quick, I believe. Where is it? Where can I do that at? I can do that right here. Let's make that as yellow too, 2.0. So the next level above that would be 88.37. And you know that the consolidation breakout, so let's just come in here and let's just put that in here. Basically, we saw the NASDAQ consolidating. We can use this as the real gauge out there. And when you have a consolidation breakout, you do a measured move equal to or greater than the consolidation. And so I am going to stick with the conclusion right now, and you'll see we'll walk through that no, 7301 may be a short-term area or short-term top or the 7200 level. But as far as long-term top, no, I don't think so. I think long-term, and I'm not saying that it's a top, the long-term price projection is more in that 8800 series, which is equal to that measured move. Now, what you and I know is that we can dump our beliefs at the door and just simply use technical analysis for the most fundamental purposes, which is trying to answer that question, is this a possible top out here? So I'll bring over this set of charts because this is really where it all unfolded for me many years ago as I was searching around for lunar aspects, planetary alignments, to see if I could find an edge, because very few people, we know we've got them in here at TFNN, but again, very few people have found reliable ways, long-term ways, in order to be able to use those planetary alignments. And I wanted to see, was there something that was present at every major bear market top going back the last 100 years? Was there some set of planetary alignments? Was it Pluto going into retrograde motion? Was it a set of 3 or 4 or 5 different, planets that had a certain alignment? And the answer was, my conclusion is, no. You could not find consistency at every single major top. Now, it was as I was trying to create or confirm that discovery, so to speak, that I came up with my own discovery and a pattern that I did see that was at every major market top. And that's the pattern of price moving higher, doing less relative energy. And, if you stop to think about it, it makes all the sense in the world, because all it's really doing is measuring that exuberance in price that is not followed through with exuberance in strength out there. Perfect at tops, perfect at bottoms, works on all time frames, works on all instruments. This is the monthly chart for the NASDAQ 100. In the case of the NASDAQ 100, let's say that pattern just failed. Let's say God is listening in on this conversation and saying, you know what, we're going to show that guy, he doesn't really know as much as he thinks he knows, and this time it's going to be different. No, although I don't think so, but this time it's going to be different. Look, I'd say, okay, but then you've got to be able to get past me on the Rhodes momentum indicator signals. And if you're looking at my chart here at TFNN.com, you're going to see some red boxes. Typically, you'd see some green boxes too. But what those red boxes mean, and we've seen this, again, this is a monthly chart out here. This is really measuring the momentum, or the EKG, of the NASDAQ 100 over time. Now, we go back into September of 2011. That is the last time we saw one of those green boxes. A green box doesn't mean it's the end of the world or anything. That would be normal with regard to momentum, kind of a normal retracement out here. All you see is one red box after another, the most recent one being formed a couple of months ago. You at least have to close below that to really get my skirt in a tizzy. And I don't wear skirts, so they can't really get into a tizzy. But on the monthly chart, and we'll come back, we'll take a look at weekly and daily, because they're important too, but we'll do it in about 3 minutes.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're trying to answer the question, hey, Steve-O, is it possible that the NDX 100 has actually topped out here? And so in order to answer that question, we took a look at the quarterly chart. We took a look at the monthly time frame chart. Now what we're looking at is the weekly time frame chart. And we can see that price at the moment, this is a weekly chart, so we've got one more day left. Price is beginning to move higher, doing it with less relative energy. But what we don't have, at least as of 1:18 on Thursday afternoon, is any kind of bearish reversal signal. Price is still above Stevie's red line. That's priced at 69.69. And so the answer is no, we do not have a topping pattern. Now, more likely than not, we are in only the first wave on the way up on a weekly chart. And I say that because of the nice decline that we had in the early part of February. I can get to a seventh wave move out there. So it has potential, but there is no potential until we get a bearish reversal signal on a weekly basis, some follow through, and a close below Stevie's red line. It's not there. It's got potential, so it does mean that you should keep your eyes open. But in also keeping our eyes open, that means we have to go take a look at market breadth and try to figure out what's going on here. So as we look at the market breadth from a weekly perspective inside the NDX 100, we're going to see we're in bullish formation. Bullish formation means prices are trading above the top of the box, that being 51 issues, whereas 24 issues are trading below the bottom of the box. So 47% above, 22 below. You've got 31% in between. Those are more neutral, or from a trend standpoint, what's the direction of the trend? That's to the upside. So this is weighted and says, we got plenty of market breadth on a weekly basis inside of the NASDAQ 100. And this thing doesn't do crossovers all that often out here. We did have one back for what lasted about, 2 weeks out here, February 10th, and it was gone actually the week later on February 17th. So it was a 1 week wonder out there, and the weekly still in bullish formation. If we switch down to the daily time frame chart, Not as strong, but still bullish strength with regard to its profile data. About 23% trading above the top of their daily boxes, 16% below the bottom. Still, from a standpoint of the NASDAQ 100 daily, no topping signal when we look at market breadth. Let's go take a look at Stevie's chart out here, see what we can see. And all we see is price thus far has just come back and tested Stevie's red line out there. That's at, I'll give you that price here in a moment. I just need to expand it. You're looking at 7024.66 is the number. We're trading at 70.36 right now. So, and when we take a look at this pattern out here, doesn't mean we can't get more retracement or anything. If we take a look at this pattern, what I like to do is just simply go back to the Q series ETF out there, because here each of you can do this at home as well. And let's just put this back on a daily time frame, and I will do it on the weekly as well. But just curious, on the daily time frame, the swing point high for an A to B equals CD to the upside is February 27th. That was at 170.73. This will help if I actually put the volume tab on here. The volume up there at that swing high was 42 million shares, and that was passed with 38. So it's passed with lighter volume, but nonetheless, it was still a breakout area. That 38, by the way, was still more volume than the all-time swing point high out here. So maybe an A to B equals CD to the upside. You'd feel better or more better if you had volume exceeding 42 million shares, but 38 not really too shabby, right? So it's within 90% of the volume out there. And price thus far, from a daily perspective, we're just simply not seeing the breakdown anywhere. And prices really just come back to a level of support, right? The support being the gaps. So whether that's 169.98 or 170.82, NASDAQ is still pretty strong. Now, what changes that? And what do we want to watch? To give you an example that maybe there's a further decline coming, because it's really important for you and I to always take a look at both sides of the trade out here. So right now, what you'd be watching for overnight, you can see that we've had two small-bodied candles the last couple of days out here. So the market basically is confused, not sure which way to go. That makes a lot of sense. And I can't see Stevie's red line number, but it's right around 70, probably 58. We're at 70.60 here. And a close below that would say, okay, you've got more of a retracement. Now, retracement, in my opinion, is a different question than am I taking a look at something that is a warning of a top? However, somebody might interpret warning of a top meaning that the market's just going to go up and there's not going to be a retracement. So I'm not in that camp out here. I'm just really trying to answer the question. In my interpretation, a top of significance. So we'll call it a top of significance out there. And I don't see it in the charts just yet. Now, do I see possibly price pulling back further out here? Different question. And the answer is, yeah, I do. You're going to say, well, God, Steve-O, now you're confusing me. No, I'm not. Now we're looking at different time frames out here. So in this case, what we're looking for, or we're looking at, I should say, is a 30-minute time frame for the NQ. Now, the NQ last night on a 30-minute basis gave you almost everything that you wanted to identify a bottom. And that is this. Price was moving lower, doing it with less relative energy. The exact same pattern that I discovered when done on using my proprietary tools out there that's been present before every single bear market that has ever existed that I know of in the Dow. Okay, so specifically inside the Dow. So over the last century, more than the last century, I actually went back 130 years to prove the point. So that pattern was present, but there was no bullish reversal candle that formed last night at about 9:30 in the evening. But what did form is the way that markets like to, for reasons that are uncanny and I don't understand, like to sing in the key of G. Letter number G, wave number 7, if you like to do that 7th inning stretch. And that's what the market was doing. That was the bottom. We've seen a little bit of a bounce, and I do mean a teeny-eeny-weeny little bit of a bounce inside of the NQ. However, what you're noticing as we speak right now at 125 is you are noticing that the price oscillator, the bottom portion of the screen, got up to the 0 level and has since now turned down. Now, I don't know what the next 4.5 minutes, how that is going to unfold with regard to the NQ. But if price stays below 70.69 out here, this is telling me to get ready for price to go test that seventh wave, that low that is out there. Because what we will see is a price oscillator that has turned down below zero. And that is always bearish. And by bearish, what I mean is that you would anticipate that price is going to start moving in that direction to the downside. And then your eyes need to get glued to the most significant previous swing point that you can see. And that takes us back to letter G out here. So if the market gives back its gains, the Dow, and we end up red inside the NDX 100 today, is that going to surprise me? Absolutely not, at least not as a 126 in the afternoon, and the way that we take a look at the NQ out here, again, just using the entire set of tools in your trading arsenal. So now we've answered that question. Short term, long term, intermediate term. And now it's time for a break. But I'll field your questions too. I'll go check out those emails at steve@tfnn.com. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So no questions that have come in. I'm searching for something, see if it pops up. Yeah, here we go. Just as a little bit of a further analysis and something that we do want to watch out here, and that is the NDX 100 going to continue to across the globe break out? You know, when we take a look at any instrument, quite frankly, especially in today's day and age, where you can trade around the world. People do, we do. You've got to. We only think, you and I basically, we think in terms of U.S. dollars because this is the country that we live in. Do you really think that people that are overseas aren't thinking about maybe investing in the NASDAQ 100? Whether they're in Europe, whether they're in Japan, whether they're in London, wherever they might be at. And so we do want to watch this month to see if, and we're only halfway through it, to see if the NASDAQ can continue to trade above resistance levels. Now, inside the NDX, as far as U.S. dollars is concerned, I have that level at 70.2297. We're at 70.43. In euros, that level's at 56.72. So if you're watching us on Tiger TV, you're going to see that I'm taking a look at the NASDAQ in multiple currencies. The NASDAQ has not broken out in yen out here, so it needs to clear that level. But it has broken out still, as we speak today, in Great British Pound, in euros, and in U.S. dollars. And if that's the case, and you're wondering, hey, how can things go up on light volume or whatever it might be, it means you have to take a look at the liquidity around the world. All righty. Enough of that. Let's go to Garo in California. Garo, thanks for calling. Thanks for holding. How about that? How are you doing today?
How are you, sir? How are you, sir?
I'm doing very, very well. Thanks so much for asking here. Tell us what you're looking at, how we can help you out.
I'm looking at EC, Edward Charlie. That's the oil company of Colombia.
Okay.
I want to ask you a question. I want to see that how shiny is your magic ball.
Okay.
If you look at the 6 months daily chart,
yes,
there is a W form there at the very top where the 5-day simple moving average is intercepting with 50-day moving average at this time.
Yep.
To me, that is a W form. Actually, it's a double bottom. Do you think this is going to shoot out from here, from this point, from 1782, or from here is going to go down towards that 50-day, which there is no other support until it gets to $13.31 approximately? What is your idea?
So as we take a look at this here, give me just one moment to add the daily profiles for you. I don't know why they didn't come up. And let's see if we can figure this out. So your question is right about now, and it's right in the middle of pretty much everything that I can. So if I take a look at some additional tools to the ones that you use, one of those would be taking a look at the market profiles. And what we know about those is that more likely than not, you're going to see a move inside of Echo Petrol to at least the 1824 level. You're at 1782 right now. That happens to be the top of its daily box. That makes a lot of sense. Real resistance, for whatever reason, on the trading day of February 28th out there. Couple million shares to the downside. You've had nothing but small-bodied candles the last several days. So people or bulls or buyers are really dipping their toes in on this equity. But it does look like, to me, that this will target 1824. If it can clear 1824, then price should go back and basically test the top of that February 28th level, somewhere around 1912. It doesn't have to get to 1912 exactly, but somewhere right around there is the way that I see it using those tools. If I look for something else, let me see here, EC, just to put it on my other charts out there. So on my other chart at 1783, so this is, I don't see anything else that really suggests otherwise. Yeah, and I don't see a reason here to be able to suggest to you that this is going to head lower versus it heads higher, with one exception. And that exception, just as one more price point to be able to provide to you, is that prices really run into resistance today on my system, which is 1789. And 1789 is this little red line I like to refer to as Stevie's red line. And so if this is going to continue to head lower, it will not close above that 1789 level. So if it's going to fail, it's going to fail, today by not closing above that level.
Yes, yes.
That's my read. What are you seeing on this? I mean, I see.
Yeah, exactly. I see 1879. That is the upper dot on 19th of January.
Okay.
Yeah, you see the value of that is 18. It's 18. What was that? 1786.
Got it. Okay. Yep. Okay.
Yeah.
Okay.
So
now, why did you go? Just out of curiosity,
that will pop up from the 1825. You don't see any pop from there. It's going to go flat or it's going to go down.
Yeah. So teach me something, if you would. Why did you go back to the parabolic SAR dot on January 19th? Was there a specific reason why you went back there? Or
that
just
is the resistance.
That's your resistance. And
yes,
why that being the resistance versus any other dot when I take a look at the daily parabolic SAR out here? And you're going to teach me, and you're going to teach others as well.
I explain that to you. The first resistance is there at January. The second resistance is here. It is on the dot, the upper dot that hit the 21-day moving average on 2nd of February.
Got it.
That is the second resistance. Okay. You're talking about 18. Mine is 1828.
Yeah. Okay. Mine. We know ours are different a little bit, but close enough. 1840. Yeah. Okay.
These are my two resistance there. According to, I don't have that Stevie red line. I don't have that one. My resistance is those dots. Those dots, to me, it tells me a lot. I mean, it's almost very similar to your red line.
Yeah. No, it's great. So it's very cool. And I know we have a lot of listeners that enjoy when you call in, especially when you've identified.
Thank you.
I know that for sure. And what's nice about it is that you have a unique and different system than most traders. So it's very educational as well.
Thank you.
Oftentimes when I get off the phone or later on at night, I'll be thinking about something. Say, I've got to ask Garo about this or that or what have you. But I've got to write those things down. It's kind of like, I don't know about you if you've ever had a dream and it's a great dream or a great thought, and you say I should wake up and write that down. You say, no, I'll do that in the morning. And you wake up in the morning, you can't remember what it was.
Yes.
All right. Hey, Garo, thanks for calling in, and thanks for teaching us part of your system.
Thank you so much. You're the boss. You're the master. I cannot be as good as you. I always listen to you. Maybe I don't call you every day, but I always listen to you, and I learn something from you every day. Thank you very much, sir. Thank you.
Much appreciated. Take care. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back up, folks. So you got the Dow positive, the S&P just slightly, and all the other indices. Well, the exception being the transports. They're up 41 points. They're being just in the red, slightly in the red. Remember when we were taking a look at the short-term time frame charts on the NQ out here? The other thing that we had going for us, although we were not taking a look at the 60-minute time frame, was its market breadth, which had switched back to a bearish position or stance at about 11 o'clock this morning. We can see right now there's only 24 issues trading above the top of a 60-minute profile versus 41. So you got a 2-to-1 rate, almost a 2-to-1 ratio out there. So another indication, at least from a short-term standpoint, that the NQ, at least market breadth, and everything else that we looked at says that it wants to trade lower out there. How much lower? You know, I don't know. I don't know off the top. I don't know at the moment. But more so just to provide you with some additional tools out there. Now, with regard to the NASDAQ, we do have a request that came in here. And this is from AGM. This is from Glenn. And Glenn says, Steve, I'm in Amazon at 1524 and Apple at 170. What do you think they are showing from here? So let's do this, Glenn. Let's both you and I actually go take a look at those market profiles. You're in, I think you, Amazon, AMZN. I think you meant, is there an AZN? I don't think so, but let's see. No, okay. So just simply a typo there. You, too, went to the TFNN School of Typing, I see. But that's good because I've been to that school. It means I can actually interpret what it is you intended on writing down there. So if we take a look at Amazon, and you're in at 1524, this is at 1584. So it's kind of interesting that you asked today about Amazon. And the reason is because if we take a look at the daily time frame chart out here, you'll see that there is a brand new profile that formed. And that profile is below price. Now, typically, that is a very bullish message. When profiles normally form, let me show you as the example. Here's the most recent one that began on February 2nd. Price typically, the profile forms and price is somewhere inside of that box, the top, the bottom, in the middle, somewhere in that box area when it forms. When price is above or below, just depending, in this case here, you have a brand new box that forms below price. It is typically Not always. There's not. I still don't have that 100% tool. I'll keep searching for it, and you keep searching for it too. And if you find it, tell me. I won't tell anybody else unless you want me to. But if I find it, I'll tell you. But here's the deal. This right now is a relatively bullish message. That doesn't mean that price won't pull back to 1562 and test the top, or even 1535, the bottom. Now, at 1535, if it pulls back there and you're in at 1524, you're going to be saying, oh, man, really? So you're in kind of late on this move. Let's see what happened on February 28th. That was a swing point that had 4.5 million shares. You're going to feel more comfortable if that was passed with 4.5 million shares. Well, it was on March the 6th. So at this stage, with regard to Amazon, it could pull back to 1535. There's nothing wrong with it doing that other than the mere fact that you're in at $10 above that level. And as I take a look at how it's trading today, and today right now it's trading below Stevie's red line, 1596. I don't care about that market profile that formed. This just suggests to me that you could see more pullback inside of Amazon. What I have to use as far as a target level for you is going to be 1535 to 1552. So that's what I see when I look at the daily time frame chart for Amazon. And since you are in at 15 and a quarter, I don't really think it makes much difference. I don't think I really should spend much time taking a look at the weekly time frame chart for you. Let's go take a look at Apple instead, AAPL. And inside Apple, you're in around 170. This is trading at 178. It, too, formed a brand-new box today. Very interesting. As Artie Johnson, right? As Artie Johnson would say, if he was doing this Rowan and Martin laughing skit right now. But we'll do it for him. Now, this is the way a normal profile forms. Price is inside the profile. It's a bullish structured box, so that's a positive. But the bullish structured box says no reason that Apple can't move down to 175.19 to 176.12 out there. So I would say from a price standpoint, you're in much better shape. It looks like to me when we take a look at Apple out there, not suggesting that you exit any of your positions, just simply looks to me like Apple might be the easier one for you to handle on some kind of a pullback. And probably when you take a look at the average true range, that alone would suggest the same. Now, the difference between Amazon and Apple is right now Apple's just testing Stevie's red line. That's about 178.40 is what it looks like to me. You're 178.75 out there. So I like the Apple chart, the Apple cart, a little bit better. Now, that doesn't mean that it doesn't have some resistance. It does. That trading session, absolutely, on March 13th, just 2 days ago, is going to be your resistance level out there. So, Glenn, I hope that helps you. That's what I see at this stage here for both Apple and the king, the real king of the jungle, and that is Amazon. Let's see if we've got any other questions. I don't see anything else. I don't recall there being anything else inside the Tiger's Den. So that means it's this time of the show to say, Steve-O, what in the heck is gold doing out here? At this stage, all it's really done is it has tested one level of support. And that level being the bottom of its daily profile. Now, this is a bullish structured box. Let me go ahead and just turn price off, just if this will work with me. Go ahead, just so we can do it. Bullish structured again because the bottom and center, well, that didn't really help, did it? I turned that off, and there went the profiles. That's the first time I've seen that. Well, here's what I can tell you, is I'm trying to turn it back on now. Apparently, I shouldn't have done that. It's slapping my hands. You're trading at 13.1890. The bottom of that daily profile is 13.1540. The actual low so far today is 13.1550. You got to love that. So all we've seen is a test of a bullish structured box. Here's what you don't want to see today or tomorrow, at least at this stage of the game, is it close below 13.1540. If gold closes below 13.1540, I'm afraid that we're going to see another plunge to the downside. And the reason is this. You would have broken that level of support, which is held every time it's tested, and we're probably going to be very close to having a falling price oscillator below the zero level. We're not there just yet, but if we close below that level of support, anticipate that gold will get flushed to the downside. What's that downside price target? Well, today it'd be about $12.97. Tomorrow it's probably about $12.97, give or take out there. We're not there yet, but keep your eyes glued. So far, what you and I can say is support is holding. And gold is doing what it's supposed to be doing, which is trying to tell those folks that were thinking that gold was bullish, it's just trying to get them moved off to the side, the weak hands. On the other hand, you close below 13.1540, and we'll see lower price. Dow's up 149. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, we got the Dow up and you've got the transports up and the rest of the market trading to the downside. Very choppy conditions out here. I would say that if we were doing the ocean forecast, we'd say there's small craft warnings out there. So be careful. This has been a really good traders market from a short-term standpoint. But as an example, we just have these different divergent patterns that are out here. You've got the spot volatility index trading at 1683, and $16.99. We'll just call it $17 as the 50-day exponential moving average. Now, the S&P is only up 2 points, so maybe that's not so unusual out here. But again, diverging messages. Not so much I take a look at the long-term trend. That's still intact, everything that we looked there. So from the longer-term aspect, you know, it's just some bumpy riding here. It doesn't mean we can't get some decent retracements, but very choppy market conditions, at least as the way that Stevie sees it. To finish off the trading session, you know, really, if you take a look at the Dow, and what's pulling it, what's really backing it off today is the number one weighted holding in there. So the top 10 holdings inside the Dow, as of last night, somewhere like 56%. You know, so you've got 10 that are 56%. You've got 20 that are the other 44%. The top 10 being Boeing, Goldman Sachs, 3M, United Health, Apple, Home Depot, McDonald's, IBM, Caterpillar. Is that 10? Somewhere right around there. Travelers would be after that, then Johnson & Johnson. In the case of Boeing, we take a look at it right now. That's the chart that is on the screen out here. You know, the last time that Boeing was down in this area was back on February 5th, and there was 10 million shares out there. Today, you've done 6 million shares. Yesterday, you did about 13 million pulling in there. So it seems like the selling is kind of dwindling by the wayside. We know that Boeing can move the Dow. Price testing support, the bottom of its weekly profile, and that's at 327.23. Folks, thanks so much for being here. Great to be with you. Stay tuned. Your favorite polar bear of mine, David White's up next. Tom O'Brien, 3 to 5. Andy Heck, 5 to 6. I'll see you on Fabulous Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are,